Yesterday, we saw US inflation numbers surprise to the upside. Now, the question is, what does this mean for these markets? And are we able to identify any potentially high probability trades off the back of yesterday's US inflation numbers? So we'll break this down for you in a little bit more detail. Okay, so hello and welcome to our latest urgent market update video. This is for Wednesday, the 14th of February. So happy Valentine's Day to you guys. Thanks as always for joining us. So you may be very familiar with yesterday's US inflation numbers. We saw a significant surprise to the upside. We're going to break down in a little bit more detail what does that mean for these markets? What next? Where are we likely to identify the next rounds of hopefully high probability trades? So we do have a particular bias. We have a particular sort of view and understanding based on our own analysis. So we want to present that to you as, I suppose we've got quite mixed market conditions more broadly speaking, and we've had this bit of a rally in the equity markets that just continues to defy gravity. It's this euphoric market condition. We've made references to economic nirvana. It's this no landing Goldilocks type environment, and that does make it really quite difficult and challenging for us as traders. So just before we get in, if we could start, as we always do, with our risk warning, just take a brief moment to familiarize yourself with our risk warning currently up on screen, and do feel free to pause this video if you need. Okay, so with all of this in mind, let's take you to this news event yesterday at, it was Tuesday the 13th of February. It was 1:30 yesterday afternoon. And just the prelude, just basically going into that news event yesterday afternoon, we've already had some inflation information coming from New Zealand. So we're at recent lows as far as inflation is concerned. And this is a quarter-on-quarter number impacting the New Zealand economy. So we've got slightly lower inflation dynamic there. And then if you look at the Swiss economy, and if we look at the charts, we saw a positive number in terms of month-on-month inflation is going up by 0.2, but we're expecting 0.6. So we're expecting inflation to be much higher. And we saw a fairly subdued Swiss inflation number. And then that takes us quite nicely into yesterday's CPI. And these markets, including ourselves, were very much expecting a number to come in below 3%. That was what all the analysts were suggesting. What we actually saw was quite a surprising and very, very mildly positive inflation number. So the headline CPI year on year comes in 20 basis points above expectation. It's a relatively small amount, but significant in the context that the Fed are looking to start cutting rates. And they say they need to see inflation down to 2% before they can do it. And this is a bit of a spanner in the spokes there. But also headline month on month is actually coming in higher than expected. Also core CPI as well. And year on year, we're expecting core CPI in the US to come in around 3.7. It's actually coming in at 3.9. So there are some out there that's suggesting that, this inflation situation could actually get worse. Most commentators are referring to it as a little bit of a short-term blip. So we as traders need to sort of navigate this quite tricky backdrop. Earlier this morning as well, we've seen a very slight improvement in UK inflation. It's still twice target. And if you look at core CPI, that's significantly higher above target. So they're looking for these numbers to come back to 2%. Now, it depends where you get your analysis, who you're listening to, as to whether this inflation is just a small little blip or whether it is actually, fairly sticky inflation, which is likely to continue for perhaps prolonged periods of time. And in our opinion, as things currently stand, it's going to be very difficult for these central banks to start cutting rates, even though there is the expectation for them to do so. If these rates stay around 3%, that will be, significantly higher above target. So that's the inflation backdrop. So the question is, what sort of market reaction did we get off the back of that news event, and how can we start to position ourselves? Well, I want to draw your attention to these moves that occurred pretty instantly. A significant amount of selling took place in a relatively short period of time. Some of these are 15-minute candlesticks. Some of them are kind of 1 hour. But broadly speaking, we had a bit of a panic set in. There was a bit of a knee-jerk reaction, which means that the Fed are not in a position to start cutting rates. We knew March was off the table anyway, but this just suggests that potentially May could be off the table as well if we don't start seeing this inflation number come down. So it's quite a linear discussion. It's not overly complicated in terms of suggesting if inflation stays high, then that's bad news for equity markets. If inflation starts coming down, then that's really quite positive for equity markets. So that side of things is relatively straightforward. So the question we're asking ourselves is this move pretty much the end of that move? We're not so sure. We're actually still positioning ourselves, and we were able to make further downside moves in the latter part of yesterday evening. And we've got this, it's not so much a dead cat bounce because we keep making these new highs in these markets, but we're looking for these markets to eventually roll over to the downside and for us to make new lows. And if that's the case, something significant is likely to happen. We're looking for the breakout in the euro dollar to the downside, and we're looking for the pullback trade in the Aussie dollar. We're currently around resistance levels, so we're looking for potentially some a pullback trade in the Aussie dollar, a breakout trade in the euro dollar, and there's also the potential for a breakout trade further lows in gold due to this stronger dollar type dynamic that we're currently seeing. So at the moment, this pullback is really quite aggressive, and it's the buy the dip traders coming in. We're going to be really intrigued to see how committed they will be with this kind of backdrop. It does lend itself to an interesting discussion point. However, our bias is nonetheless to see short term. This isn't a structural shift on our part. This is just a short term opportunity to start getting involved in these markets if they roll back over to the downside. So that's what we're looking for. We've got these prices potentially running into these moving averages, and we've got a lot of resistance up at these slightly higher levels as well. So that's these are resistance levels as prices push back. We've got a 50-period moving average coming down to meet it. So a rollover around this little period in here for the S&P 500 around the 49.75 to the 49.85, somewhere inside this little price here, we'd be looking for some selling opportunities to commence. Okay, so that's really what we're looking for off the back of yesterday's inflation numbers, which is for us to see some further downside in these equity trades. Short term, I don't think it's structural by any means. We could very well be looking to buy these markets at much lower prices, and we think there's plenty more mileage in the dollar strength trade as well, believe it or not, as a result of this equity move. So the other dynamic to bring into play is the treasury yields. So we do have these US treasury yields up at really quite significant levels. We saw a strong bounce yesterday, and we're seeing further upside today, which again, it just feeds into the narrative that we're trying to adopt, which is a bit of a bearish signal for equity markets, and it's a bit of a positive sign for the US dollar. So hopefully that breaks down a little bit the title of this, the fact that we're acknowledging that US inflation is proving to be quite sticky. And hopefully we've explained in a little bit more detail what our approach is to these current market conditions, which are currently pulling back. So that actually is presenting some, hopefully some decent opportunities as these markets unfold. Now, in terms of narrative, yesterday's higher inflation numbers have the potential to completely shift the narrative, and this is kind of what we're seeing initially yesterday for a relatively short period of time, and hopefully more so as time unfolds. So what we're looking for, we've got this sticky inflation or higher inflation kind of narrative. We're looking for risk-off market conditions, which imply these indices to the downside. This is what our analysis is pointing to: a stronger dollar, higher bond yields, and pressure coming on these commodity markets as a result of this higher dollar. So this is the narrative of choice. This is what we're going to focus our attention on. And let's see if we do make any progress in the coming trading sessions to this effect. And if so, we're likely to benefit from some good trading opportunities. Okay, then, so that just about concludes this urgent market update video. Thanks very much for joining us. If you do have any questions about anything covered, do feel free to drop us an email at support@thelivetrader.com. We'll be happy to get back to you as soon as we can. So thanks very much for joining us. Do stay tuned for our next video. And if you are interested in learning how to trade, if you want to sort of know a little bit more about all of these major topics and how they influence market conditions and how we can identify high probability trades within those opportunities, you're very welcome to join us. We still have our discounted live trading and education bundles on the website, and they do start from just $59 per calendar month. So hopefully you'll find that affordable solution for you, as well as learning how to trade. And for more information, just go to the Live Trade Room, which is our website.com, and feel free to connect with us through our chat function if you have any questions about trading these financial markets. Great stuff, guys. On that note, listen, thanks so much for joining us as also. We look forward to seeing you next time. Bye for now.